On everybody, this is Andrew from DeFiancy. All right, guys, we are currently looking at ES right now. We're about 2 hours roughly from market close, at least the cash session. And the market's been pretty much like we talked about yesterday, which is that it's just been ranging around chopping. As you can see, we had this, well, if we zoom out a little bit, we can see that we have this range here established. We talked about this yesterday where anytime price got near this, roughly 45, 70 area, it wasn't going to want to go higher very easily. We would need some pretty compelling information to be able to push us higher. And conversely, it's not going to want to break down below this area here, which we said was about 45.40. Now, we didn't quite get there, but as you can see, it's just confined within these two boundaries. And this is perfectly normal price action for after a massive rally like we've had over the last few weeks. Now, I think people need to keep in mind that traditionally, end of year rallies are likely, but that doesn't mean that you rally the entire 2 months going into the end of the year. There is likely to be very low volatility and very low volume probably for the remainder of the year, to be honest, or for most of it. Not that you can't have big rallies towards the end of the year. Anything can happen. But typically big, large traders, institutions, trading firms, they don't like to do a lot right now. Most of the volume to prepare for that end of year rally has already happened. People are already in their positions from lower, or they could be buying here, chasing as we go up. But for the most part, you're probably not going to see very aggressive price action in either direction, assuming that you don't get any kind of dramatic shift in data. Okay, that's important to understand because low volume, low liquidity on the order books it's a double-edged sword. It can go either way, right? If you had some compelling bearish data that comes in over the next few months, next few weeks, not likely, but if it did happen, you could have a big vertical move down. But again, we know the economic data, we know what to expect for the most part. I don't believe you're going to get anything to really move this market to the downside unless it's very compelling. And the reason why is everyone wants to buy the dip. So we talked about how when the market is in a state of everyone wants to buy the dip, it doesn't really happen, right? You need information to make people say, actually, I don't want to buy this dip anymore. That's how you get them, right? And that's why Bitcoin and stocks, that's why they're just kind of up only right now. It's because everyone really wants to buy dips who are not currently positioned in this market, and you will need something to scare people to really get the market to significantly sell off. Now, that doesn't mean you can't trade lower to this 4,500 area or even lower naturally. That can happen just from positioning. But as you can see, you're just ranging up here, and people are actually buying and preparing for further upside. And with stocks, it's not, or with the index, for example, it's not exactly as clear as Bitcoin. But you can see how this is probably going to base out, and you're probably going to get a move higher. Who knows how long that takes? Are we going to range between these two levels until January? That remains to be seen. But expecting significant downside just doesn't really seem like a wise trading plan at this point. Obviously, be prepared for it. It can happen, but just doesn't, like, if people are shorting with a lot of size here, expecting that to happen, I really just disagree with that. Until you get some information change. And as you can see, for example, today we had U.S. core PCE. We talked about how if that came in, neutral or cooler, the markets would, like that. Basically, the market doesn't, this didn't change anything from yesterday. It came in as expected, 0.2%. And then you had unemployment claims that were basically what was expected, and U.S. personal spending month over month. That was expected. The only data that was a little bit unexpected, slightly, was U.S. pending home sales, which was negative 1.5% versus the expected negative 1.9%. So Basically, nothing here is a game changer, which is why to me, this is a very easy market to trade, actually, because anytime you get a move, we talked about this yesterday, to the value area lows. Okay, so I'm going to show you what I mean by that. If we look at this chart, you can see it a little bit clear. It came to this daily value area low. It sat there for a couple of hours, and then it just bounces and gets right back into range. Vice versa, it gets to the value area high. Did that earlier this morning. It got a bit above it because you did have some news that propped the market up initially, and then it just sold off, right? You basically just stick to that scalping plan until you get a break. Now, at some point, you'll go and fade a move up here or down here, and it'll keep going, right? But if you hit 5 trades in a row, right, and you're conservatively taking profit, that is a really good trading strategy, right? You just got to keep your losses smaller. Don't hang on to it if it really starts to break out of this range, because it will be aggressive the longer it stays in here. But this is perfectly scalpable if you're trading this intraday. And people who are long from lower, I don't see any reason why they would sell. There's really nothing to scare this market. Does that mean that something can't come along? Of course not. Something can come along. In fact, there probably will be something, right? The markets are like a roller coaster, up and down, up and down. Good news, bad news. Eventually, you're going to get some bad news. The question will be, are there going to be buyers for that? And I think there will be. There's only 2 things, or the market cares about 2 things right now, broadly speaking, risk asset wise. Is inflation coming down to the 2% target? And are earnings good? If you satisfy those 2, everything else is noise, to be honest. Now, I know there's people who do this, the macro stuff full time, and they have all these different theories, and blah, blah, blah. It's just noise. It really is noise if you're a day trader, or even a swing trader. You're just going to get bogged down by it. It's useless information for the most part, unless it affects those 2 things. That's my personal opinion. But I think people would be a lot better off if they tuned out a lot of noise and just focused on those 2 pillars. And price action, obviously, is another pillar there. Respect the price action regardless. But the price action seems to be following those 2 narratives very closely. And as you can see, we're getting a move back above VWAP now. You can see the tape's turning green. I was actually in a long here, and I cut it prematurely because I got a little bit bored watching it. It was very boring for the most part, but that's probably going to be the end of the day here. It's just basically coming back to mean, reversion back to mean intraday, coming back to the open here. Probably just wants to chill after that, in my opinion. Now you do have, get this out of here. You do have Powell speaking tomorrow, so it's very important to understand that. He could say some crazy stuff. We've had Powell speeches that do change the momentum of the market, but I'm not really expecting that, to be honest. I think at this point the jig is up. They can play poker. They can give you their poker face like this Daly lady here, Dally, whatever her name is. You know, she comes out and says, "I'm not thinking about cutting rates at all right now." Yeah, okay, sure, right. They're going to say that. And the market, if it was a human, it's just going to roll their eyes at that, in my opinion. They just do not have, they're not very convincing. If you really look at what they're saying and what's happening behind the scenes, namely, and you should really look into people who focus specifically on the sovereign debt situation in the United States. But I'm a math guy, and the math doesn't add up. You can't keep interest rates up at 5% for very long. You will absolutely turbo break something. It's just common sense. You cannot, when people have to start rolling over debt to specifically the United States, you're talking about a percentage of GDP required just to pay off the interest of that debt becomes enormous. It's just impractical. It's mind-boggling when you actually think about it. And the only other way that you would, or what you would have to do, what the government would have to do, is they would have to cut social security, military, or something else, and you don't win elections that way. So the only way to fix their problems is unironically to print more money. We're not going to go too much into that, but that really is the crux of why I think big piles of money is just not going to believe that poker face. That's just my personal opinion on it, and also many others. Let's take a look at Bitcoin here. I think Bitcoin is interesting. Bear with me. So we've talked about how Bitcoin is printing this just, I'm calling it the immaculate accumulation. It's just astounding, really, that it just keeps doing this. It almost seems like it's unstoppable at this point. It just keeps making these lower or these higher lows. It has gotten topped out for the, in terms of a flat bottom here up top. I guess you could call it a double or triple top or whatever, but it's really not. It doesn't have that signature. It just looks like it's going to grind higher. I don't think I've ever seen this kind of, I'm sure there's outliers, but typically these do not break down very easily. They like to expand. When you have this vertical accumulation like this, it starts to get a lot. There's a lot of shorts that are building up, a lot of longs also, but I would be very surprised if it broke down before expanding up. Now, that might just mean it expanding up and coming right back down, but typically this is it's like a pressure valve. I mean, it's gonna let some pressure loose to the upside, in my opinion, most likely. But I do think that you have to be careful, because if it is able to start to make new lows, I mean, it's going to be like a domino, boom, boom, boom. It'll break down pretty quick, most likely. But I think your risk reward is still pretty good for Bitcoin to the upside here. So I think that explains a lot of this. We know Michael Saylor had bought a bunch of Bitcoin. I can actually show you that. We'll go into that for a second. So Michael Saylor, if you don't know who he is, this guy is the CEO of MicroStrategy, and they bought another $600 million at an average price of about $37,000. So that explains some of the buying pressure. They've been doing this for a while. Okay, so this is not really like significant news. Just something to point out. You still have pretty big buyers like this guy. There's other people, but he's kind of the leader of the pack, so to speak. I mean, he is pretty aggressive. He likes to buy periodically, and they have this. There's theories on how they keep doing this, MicroStrategy that is, how they keep buying Bitcoin. But as MicroStrategy trades at a premium to Bitcoin, I think that they're just taking that delta and buying Bitcoin with it. Something to that effect, maybe. I'm sure they have maybe a more sophisticated strategy to some extent. But this seems to be just a winning strategy for MicroStrategy. They're up quite a bit on their investment with Bitcoin. I think they averaged it out at, about 30.2. Okay, it's pretty good. What else do we want to talk about? So altcoins are interesting here. They look pretty good, actually. So I know in a video before I said they might slow bleed down. It doesn't look like they're going to do that until Bitcoin has some issues. If we look at Near here, it's starting to have this accumulative price action sideways. We like that. So when you get a big expansion and then things go sideways, that's not really bearish. It can be. It depends on the context, right? I mean, you're really not that up that much on Near and things like AVAX. And I think this is I'm not saying it can't go lower, but I think people are going to see this as still a golden opportunity to get into altcoins on the spot side. Now with leverage, you always have to be careful because these things can break down, 25%. That would not be a crazy situation for these things. But for the most part, I don't think that's going to happen, actually. I think, maybe you get another 15% down or something. But it's becoming very difficult to make a case why you would not enter into these altcoins if that is something that you want to do, right? Like timing-wise. Like people are running out of excuses if they had a plan to enter the altcoin market. I don't know what you're waiting on at this point, to be quite frank. Now, that's not financial advice. It just seems like this is really the opportunity that people have been waiting for. They're not up tremendously off the lows yet. I think these things will be up literally like some of these things 10x within a year or two, if not significantly more depending on which coin you're talking. So why would people wait? That's just how I see it. And I think the price action is kind of confirming that psychology that the market has right now. What else we want to talk about, guys? That's really it. I think we're just going to keep this one short. Well, let's go over the altcoins. False alarm. Some of the altcoin market. Let's look what has happened over the last 24 hours. So, BitTensor, I don't even know what either one of these two are, to be quite honest. Render is a very interesting protocol. It's a decentralized GPU system. I mean, basically that's what it is, which is nice because anytime you have this AI narrative, which you are in an AI narrative right now with OpenAI and Microsoft, and a lot of people expect to see breakthroughs in artificial intelligence as we go through the next few years. So things like Render are going to benefit tremendously from that. You could kind of think of this as like the NVIDIA of crypto. That might be the best way to look at it. We have Theta Network, that's up about 5, almost 6%, which is, if you don't know what Theta Network is, that's kind of like a decentralized YouTube. Last time I checked, I think, or a streaming platform, video platform in general. We have Celestia, that's been running. We talked about that in the last video. Polkadot, if you don't know what that is, it's an alternative layer 1. Most closely resembles maybe Avalanche. They're very similar in terms of how they have these Internet of Blockchain system. They call them subnets, whereas Avalanche calls them subnets, whereas Polkadot calls them parachains. So it's like a system of different blockchains. Instead of having all these different apps on one blockchain, you would have like an application-specific blockchain within a blockchain network. That's Polkadot. And Avalanche is like that as well. So I'm not a big fan of Polkadot just because like there's nothing going on there, but maybe this is the year, or maybe this is the cycle. It takes off. I'll be open-minded on it. Maybe something to look into. And we talked about Near. So yeah, guys, I think that's really all we want to talk about today. Until next time, happy hunting, friends.